question on Twitter from Rod in Albuquerque. A very timely question from Rod. With trading commissions at zero, does drip investing make sense anymore? Should we all just use our dividends to invest in our best idea at the moment? Great question. Obviously, in the wake of last week's news, Schwab, Ameritrade, E-Trade, just saying,
it's a consumer's world out there.
It's free, everybody. And as someone who has had his money with Ameritrade for a long time, I was very happy to see them follow suit with Schwab.
Yeah, for sure.
Drip investing, for those unfamiliar, dividend reinvestment plan investing. What do you think of Rod's question?
It's a good question. There's two kinds of drips. One that is the company itself offers the ability to reinvest the dividends they pay you into more stock.
You go right to the IR department of the company.
Exactly, and that's commission free. The other kind is offered by most, if not all, brokerages, where you just click a box and they will automatically reinvest your dividends for you. That is also commission free. So either way, you're able to add to the companies you already own. Hopefully, they're your favorite companies. Slowly, quarter by quarter, and little drips and drabs. Get it, drips? I didn't mean that. And commission free. So that's great. But now here's the question, though. Instead of doing that to kind of get around the commissions, right? It's a way of investing in companies without having to pay commissions. In the new world we've just entered, where you can invest in any company, U.S.-based any company, U.S.-listed company, for no commissions. The question Rod asks, well, what about now? Maybe we should be taking those dividends in cash and reinvesting them into our new and favorite ideas. And there's a lot of merit to what he says. And I've always had this kind of up and down opinion of this. Professionally, when I used to manage funds, I always took the dividends in cash because for exactly what Rod says, I always wanted the cash available to redeploy into my favorite positions, whether they were new or even old. And the small amount of commissions I would have to pay if I did invest more money in stocks I already owned was not a reason not to do that. However, personally, I always tell people it's just so much easier to automatically reinvest your dividends. You start off with 20 shares of something and, you look 10 years later and all of a sudden you own 25 or 30 shares of the company. And it's just a great way to not have to constantly think about redeployment of cash because not everyone actively manages their portfolio in such a way. And so this is just a really great way to set and forget it. So either way, if you are the type of person who manages your portfolio pretty actively, I see no problem at all taking cash and reinvesting it at no commissions in whatever your favorite idea is. If you're a person that doesn't want to look at it quarter by quarter like that, reinvest those dividends. It'll add up over time.
I also think that you can look at some of the companies in your portfolio and the ones that you are the most confident about, that you have the greatest affinity for, if they're paying a dividend, I mean, and this is how I do it in my own investing, is I'm just putting it right back into that stock.
Yep. For sure. But not every company pays a dividend, obviously. Some of your favorite companies may not pay a dividend, and then it would be nice to have some cash to increase your position just by buying shares. But you can do a combination, maybe invest some automatically and take some in cash. It just depends what kind of investor you want, how much time you want to spend looking at your portfolio.
So it's a great question. Thank you, Rod. Keep the questions coming on Twitter and through email, and also on YouTube. We started this a few months ago, doing a live Q&A a couple of times a month on YouTube. You can find the Motley Fool's YouTube channel. It's just youtube.com/themotleyfool. And they went, well, now we're doing them every week. And so this Thursday afternoon, Ron, you're going to join me. Emily Flippen, I think, is joining us as well.
Wonderful.
And we're going to be taking questions from the viewers, but we're also going to be talking about something that is right up your alley, which is cheap stocks.
Are there any cheap stocks anymore, Chris?
There are cheap stocks out there, but we'll also be talking not just about cheap stocks, but also about the perception. So we'll be talking about
the theory behind it.
Yeah, because there are stocks that cost hundreds of dollars, but on a valuation basis they're cheap. But then there are some stocks out there that are under $20, where it's like, yeah, this is one to put on your watch list.
Yep, can't focus on the stock price. Got to look at the whole company.
Yeah, so check that out every week on our YouTube channel. You can check those out. You can submit questions.